Hello, Monday. Hope everybody had a great day. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Going to go through what we do each and every day in the Daily Market Commentary. We're going to take a look at the moves that happened in the market. I typically like to do these. I had said I want to start doing these in the mornings, but I've actually got kind of a hectic schedule this week. So I'm actually catching this one a little bit later in the evening, but it's pretty good because we got a little bit of a pullback today that we can finally talk about. You know, it's one of those things where we've been talking about we need a little bit of a pullback. It'd be nice to get a little bit of a pullback, and we did get that pullback today. And let's go ahead and dive right into it. For those of you that are new to the channel, we look at the same 10 to 12 futures markets every day, leaving the lines on the charts. And the reason we leave the lines on the charts is because I want to be held accountable to the trades that we look at. They're not always going to work out, and I think it's good for you to see how we manage trades when they don't work out. So let's go ahead and get rolling. Starting with the S&P. So the S&P today had a pretty big down day. It was our biggest down day of the year. If I look at it on a daily time period, you can see that it's definitely our biggest down day of the year. I mean, we've only had 3 of them, but by far our biggest down day of the year. And it's actually pulled us down into a potential buying opportunity. Now, that being said, it is a potential buying opportunity and an area that we have marked off as a potential buy. I am not in love with it at the moment. I'm really not. I don't like this arrival into this zone. I feel like we've hit it. I like the way we came into it. I don't like what we've done since we've gotten there. So if you're a little bit more risk averse, maybe you pull some of your position off, maybe you tighten your stop up a little bit, maybe even move to more of a candle-to-candle style of trade. But the fact that we got to this area, now one of the things that I always look at are wicks. To me, a wick tells me a lot about the psychology of the market. And an upper wick in a buying area, when I've got a buying area like this, and I've got a long upper wick, in what should be an area where I get long lower wicks, scares me just a bit. So I would be perfectly all right if somebody right now said, you know what, we're going to start with a candle-to-candle trade using this lower wick reversal candle, and then we've got an entry just above this candle's high, and we put our stop right there. I'd be okay if somebody did that. You also can still, follow the plan, have it a bit wider. For some people, that's kind of a wide zone, but just be cautious of it. I don't like the fact that we're chopping around in here. Now, overnight, this could continue to rally right from here back to all-time highs. So the trade is in play. Nasdaq, looking at the Nasdaq, we had talked about this as a potential Nasdaq area as well, but I didn't put the lines on this one simply because I felt like the S&P was a slightly better area. Now, looking at this, you can kind of see why, right? We got the move popped up, and then we've come back down into it again and been pretty unable to do anything since then. So maybe you were able to catch a short-term intraday trade off of this little level as it kind of fell to those lows and was unable to hold those lows. But so far as what we're doing right now, if you're not in this thing, let me remove these lines, where's another chance to get back in? Well, I think we could get another bounce off of this little region here, but I'm not super in love with that either. This could be a decent sized pullback, and we've had 4 consecutive up weeks. A decent sized pullback would not be an unheard of amount. I mean, we've gone about 400 days in the S&P without a 5% drop. So, a little bit of a pullback would give you a good opportunity to find, not only some individual trades, but also to find some stocks with relative strength or relative weakness. If the market pulls back, let's just say, and I'm just not saying that it is, but let's say the market pulls back 2 or 3%, and we have stocks that maintain a flat price structure, they don't really fall that much, that'd be some relative strength, and those might be the buyers if the market does start to reverse. So just something to consider, looking at relative strength and relative weakness of those stocks against the overall market. Crude oil, this I was literally just telling a friend of mine about an hour and a half ago, nicked by a tick, right? This area we almost got filled, and it said, psych, just kidding, haha, no soup for you, no soup for you, and it's just barely missing. Now, we continue to just barely miss it, and here's the other thing I don't like. I don't like that we've put in 2 consecutive lower swing highs and roughly the same swing lows. So I'm actually going to remove this area. I am no longer a huge fan of this region. I still have this area down here that I like. This was the area that we got long from a while ago, but I'm going to hold off for just a little bit. Matter of fact, if somebody told me that they were shorting on a rally back up to here, I wouldn't be opposed to that, right? This is a good classic breakout pattern to the downside where I've got these lower swing highs and roughly the same swing lows, and that's where we got that breakdown, which is really the exact same pattern. If you look at just this area right here where I've got those lower swing highs and roughly the same swing lows, that's roughly the same pattern as what we have right here. Right? And so that's why I'd be okay if somebody said, you know what, I'm going to get short on this thing up here because I think there's room for it to run. Remember, when we talk about getting short on a breakdown, you've got to have room to roam, and there is a little room to roam. Gold is continuing to fall. We still have our gold area down here as a potential opportunity to get long if it pulls back into this range here. So this is kind of where we're looking in the gold markets. We talked about a bit of a pullback coming. Now, interestingly enough, gold, we've gotten a few days in a row of down price movement. We also, our pullbacks are getting deeper, right? There's one pullback. Here's the next pullback. Here's this pullback. Our pullbacks are getting deeper, and our momentum is waning. If I pull up a momentum indicator, you will see on the daily time period that we have higher swing highs and lower swing highs on our momentum indicator, in this case, the MACD. So I'm a little bit more bearish over the next couple of days than I am bullish on gold, so just keep that in mind heading into the next few days. Looking at our bond markets, so looking at the bonds, the ZN, did not quite get back to our small time frame entry for the short. I still think that the bonds are continuing to fall, and this is going to roll over into, I think, other markets as well. You're starting to see, and we've I don't think I've talked about it on this video, but the REITs are certainly taking a bit of a hit. We're definitely seeing that weakness, and that stems from the rise of those interest rates, and that's going to cause those bonds to continue to fall. So I think that as it stands right now, I am looking at if prices give me a rally back up in the bonds, I think there's lots of room to keep falling. We got the breakdown below this area here, so let it kind of keep going. The Aussie. So the Aussie, we still had our area in place from our trade last weekend. Hasn't really done anything since. I'm actually going to remove this area as that trade worked out very well for those of you that were able to jump in and take it. Hopefully some of you were. Right now we're just kind of consolidating, doing a whole heck of a lot of nothing. The euro. So the euro met our entry, and we got a nice little move out of the euro. Don't know if anybody was able to catch that little euro move today. And that euro trade came right up to what we would consider our price target, the opposing fair value area. Now, my problem is that there wasn't a great reward to risk on this, so you may or may not have gotten that little bounce. In the meantime, that level is no longer valid, but we got a nice little bounce off of it for those of you that were able to participate in that little move. And then the Canadian dollar, we're still looking at this as a potential area down here. But we have not been able to get filled on that area as of yet. Last and certainly not least, Great British Pound. We've come into our area in the Great British Pound, but I feel with the British Pound like I do about the euro. Not the euro, like the S&P. We're into the area, but we're kind of into the area. So not a lot of love for this region. Not a lot of love for this area as it stands right now. And so we're going to let this British Pound trade be. If you're in it, you can hold on to it because you're still hanging around there. But I don't love the way we've come into the level, and I don't really feel strongly that it's going to bounce up out of here with any strength. So, if you are feeling uncomfortable about it, sometimes the best trades you can take are those ones that if you're not feeling comfortable about it, just get out, walk away. It's not going to hurt you. Right now, you're out at about a break even. Japanese yen, we've got just missed by a tick, and we're going to leave this thing as is right now. And then the nat gas. So our nat gas on the contract rollover gapped way down. Obviously, we're not going to be looking at this area right here, and I don't have the new contract information to really give it I got to put it all together and get better levels with the actual March contract. Matter of fact, let me just pull the H8. Oh, looks like we got the same movement on the actual March, because there's the full March contract, same essential movement. So you might want to look down and right around 3 as the next potential long area in the nat gas region. So with that being said, those are kind of the areas that I'm looking at for today. Remember, we've got our euro trade worked out for a little profit. British pound and the ES are both kind of meandering in their areas. Doesn't mean that we give up on the trades completely, but it's up to your risk tolerance on what it is that you choose to do and what you may want to look at this point. I do think that it's, as I've said for weeks, I think it's time for a pullback, but don't fight the market, right? If the market's not giving me a clear signal, I'm still not shorting. There's still nothing up here, by the way, that makes me want to short these markets. I'm not telling you that I made any money on this move down, because there's no way that I'm going to know that, and there's no way I'm shorting the markets at these levels. Now, we get another thrust down, and I get a quality selling opportunity up here. I might be willing on the small time frame to start to consider something, but every time you short at these levels, you're playing with fire, and well, I'm just not in the mood to get burnt, I got to tell you. So keep that in mind. Until I'm definitively proven wrong, I'm going to continue to do what the market tells me to do. I'm not going to have my own opinion. It's probably the safer way to be. So thank you so much, everybody. I hope you have a great trading day tomorrow. If there's anything I can do for you, shoot me up on Twitter. Send me an email, chuck@iiefinancial.com. And till tomorrow, peace out. See y'all soon.